Welcome to the FarrCast, bringing you insights into Wall Street, Washington, and the world. And now here's your host, Michael Farr.
Welcome to the FarrCast. I am Michael Farr. Thanks so much for joining us again this week. It is the 15th day of August, which, I'm not much of a math guy, but I think that puts us about halfway through the third quarter of 2024. 2 weeks ago, folks, I got very popular again. I was popular with the media. I was popular with reporters. They wanted me on CNBC. They wanted me on a couple of other stations that I couldn't go on because of outlets and networks, because I'm under contract with CNBC. Journalists, print journalists were calling. Radio, CBS radio's calling because the market's down, it's crashing, everything's going to hell. This is the big pullback based on the unemployment data. And the futures were down 1,000 points. And I said, I really don't think the world is ending. That was my message. I've seen these before. The world's ending. And it never has. So let's go with it's not going to end, was my basic message. Not really complicated. Just, that's what you do after you've done this 37 years. What else? Well, there was this carry trade. And I didn't know on Monday what was going on, but it certainly didn't feel right. It didn't feel like this was the really beginning of the waterfall effect that dragged stocks lower. In fact, I said on the air that it was much more of a ripping off of the Band-Aid, that the most painful down markets are those that are eroded just day after day, 10 points, 20 points, 30 points, 5 points, lower and lower and lower, and you don't get a break. That's what the real bear markets, down market pullbacks look like. So it was an opportunity to add where those who wanted to add. It took guts. I also said that I assured folks Warren Buffett was not panicking as those prices were coming down. Warren Buffett was probably buying because that's what he does when stuff pulls back meaningfully. Did it pull back meaningfully enough for Mr. Buffett? Well, I don't know. But there were a lot of things down, particularly on the big tech front. 15, if not 20%. And regardless of where a price has been, the rule is when it pulls back 15 or 20%, that's probably a good opportunity. So the world has not come to an end. Vice President Harris's campaign is picking up some steam. Also, folks, know that everything can change very quickly in Washington. And the thing that you can count on is change. And the biggest mistakes you're going to make in political assumptions are Malthusian assumptions that they're not going to change. They always change. Whatever's going on right now can change dramatically between now and November. So do not get comfy and know that it can change. We're hearing some reports of economic plans this morning from Vice President Harris's campaign. They are not economic plans that I've heard. What I've heard is economic pablum. We're going to make things better. Great. We're going to help folks who need help. Great. That's not a plan. This is not a plan. So just know whether you're hearing details or whether you're hearing pablum. Politicians are great at pablum. I'm sorry if that's a knock on Vice President Harris and you love Vice President Harris. President Trump hasn't given you anything either. They're all going to give you as much pablum as they can without anything to which they need to be held accountable. That's what they do. That's what they do. So Mahaffee's going to talk about that coming up. What do you do now that the S&P 500 is back at close to 5,500? The Dow is over 40,000. Are you a buyer? Are you a seller? What do you do with your portfolio that we've been through these tranches and inflation doesn't seem too bad? And the Fed looks like it's going to cut 1/4 point. I'll tell you what you do. You call the smartest guys you can find. Jim Lebenthal. What are we going to do? Jim Lebenthal from Cerity Partners is the guy I call anytime I need to know anything. Good morning, Jim.
Michael, good morning. I love your intros. I really do. And I don't know if you edit them. And so people who are listening to this final version will say, what's he talking about? But you just gave a wonderful intro, and I have to say there's a lot of truths in it, including that change is always there. Things are always
Yeah.
going to change.
Yeah.
What's never going to change, Michael, is that you're popular with me. That will never change.
I listen. My mother died years ago, and I've been looking for somebody to have my back here, Jim. Thank you very much.
All right. Well, with the love fest over, what do we do from here? What do we do from here? It was a good intro. I mean, I think you were appropriately insouciant about the yen carry trade unwind. I mean, that was seemingly to me ridiculous. A couple of weeks ago, the VIX shot up to 65. And you could see when that happened that that was not normal. There was one risk that was hanging out in the aftermath of that, which is, did this yen carry trade crater any financial institution that matters? 2 weeks down the line, it doesn't look like that's the case, touch wood. And with that not being the case, we can focus on the macroeconomic situation, which is pretty good. It's pretty good. Now, again, 2 weeks ago, you had that, I'm not going to call it a scare, but disappointing result on the labor report for July, where the Bureau of Labor Statistics said that it was not weather related when it clearly was. We've gotten some good economic data since then that sort of takes that fear away. Where we are, Michael, just to summarize, is we've got a U.S. economy that's growing nicely. We've got inflation that's coming down nicely. We've got a Federal Reserve that's set to cut, profits growing. And what I just described is a pretty powerful elixir for stock market gains through the end of this year.
I thought that the tantrum that markets had over that unemployment number and the employment number being weaker was like the overweight person that just lost 30 pounds, and then the critics say, well, but I don't think that was a good diet you were on. I don't think that was really a healthy diet you were on, where you lost the 30 pounds that you had to lose. Shut up. We had to get inflation down. You don't get inflation down when you have a tight labor market and pressures on wages. It had to weaken if we're going to get inflation down. We now have the magical cue, the angelic chorus in the background here, Harry. We have the numbers coming down to where we might have this soft landing. The Fed's going to ease by 1/4 of a point because real rates are now over 2%. And so it all seems to be working, and we're arguing about around the edges. So I'm saying to you, Jim, I think that this economy, we're not out of the woods. We've got something of a slowdown here. Okay, but it had to slow some. Will they get it right? Will they get it wrong? I don't know, but it did seem to be a little overly critical to me.
Look, as usual, you're making me think deep thoughts, and I actually want to put I want to put a question
I
to
keep
you.
thinking of the Saturday Night Live spit on deep thoughts. Do you really need 10 toenails if you have 10 toes?
But here's the question. Why is this rally? Why is this economic expansion seemingly so hated? If you give the bears the slightest piece of news upon which to fixate, gnaw, devour, they go nuts. They go nuts. And I think what it is a combination of historical macroeconomic patterns being blown up by the COVID and its aftermath, combined with that because of that, some investors are not fully invested or short the market or whatever it is. Definitely, there are macro strategists out there that I read on a daily basis, some of them who are just unable to grasp that the economy, while slowing, is doing just fine. And they're calling,
it's still expanding. GDP is still growing. The U.S. economy is still expanding, and the risks to the U.S. economy in terms of inflation are diminishing. Period.
Now, there are risks out there, and
yes, there are.
I don't want to give short shrift to them. The state of the consumer, and Michael, you and I have discussed this, is a looming question. We we worry that the consumer is tapped out from pandemic era savings. We worry that the resumption of student loan payments will crater retail sales. We worry about high interest rates and various things curtailing the ability of the consumer to spend. But if you look at real-time indicators of discretionary spending, like air travel, like restaurant bookings, like Broadway show attendance, it shows a pretty robust consumer. And as the Fed cuts interest rates, that's going to take some pressure off. Now, I want to make sure I'm not being insensitive. I know that the lowest socioeconomic demographics in this nation are having a really tough time, and that really breaks my heart. I don't want to just gloss over that. But it looks like relief is coming, and it's coming soon.
Jim, the U.S. economy is made up 65, 70% driven by the U.S. consumer. So you and I spend a lot of time, as does everybody else who pays attention to the U.S. economy, to the U.S. consumer, the health of the consumer. Do they have the bandwidth to keep spending? Do they still have wallet to continue to drive economic growth in this country? So I always say country. And the answer is, it's getting weaker. And when we saw those jobless job numbers and fewer jobs added, you get a little more concerned for that consumer. How much can they continue to spend? And revolving credits going up and all of that stuff. But that is always at the core of any economic slowdown or expansion. You can look at consumer credit. You can look at the consumer savings rate. We always talk about the consumer. All right. The consumer is hitting a tougher time here, as we have to see if they can continue the expansion or not, if they can continue to spend. And a lot of this is being affected by the rates that they're paying, the interest rates that they have to pay. What's the cost of money? So the Fed raised the cost of money to slow inflation and the expansion. That's worked. Have they done it too much? Big question. So can the consumer keep eking along and keep the economy growing? That's the definition, in my opinion, of the soft landing. We're going to wait and see, which brings me to my final point, Jim, and we've got to go. Fed cuts rates 1/4 point here. I have said that I don't really care as much about that you always get 3 cuts typically, whether we get 3/4 point cuts, whether we get a 1/2 point in there, doesn't. The most important part is that the Fed has changed direction on policy, and they've stopped tightening and they've started accommodating. That's what will start. They've indicated they're going to do it. We see it in September. That means they're going to try and soften whatever slowdown they're seeing happen. And typically over the long term, that's always good for markets, is it not?
It is. And you left out one very important point, which is that they're not cutting into a recession. This is, to use the technical term, this is a mid-cycle adjustment as opposed to a panicked Sunday night emergency meeting. We're going to cut by 75 basis points. This is simply the real Fed funds rate when you take out inflation is just too high. So they've got room to cut and they're going to do it. The markets are pricing in 4 25 basis point cuts or 100 basis points this year. I think that's a little much, but you'll certainly get 2 and maybe 3. And you know what? That's going to take a lot of pressure off. It's already happening, Michael. You see where mortgage rates are? I'm sure you do. They're coming down in anticipation.
An application going up, that creates economic activity. And it looks still to me like this is being well orchestrated. And I never thought it would happen. I never thought they'd get this right. They almost never get this right. I'm praying they get it right. I'm still not convinced, but we'll see. Jim Lebenthal, advice to Fred and Ethel, stay the course?
It is stay the course. And both you and I hesitated in saying that because we're thinking, don't we always say that?
That's exactly what I was thinking.
Yeah. And the truth is we do always say that. And there's a reason we always say it. It's right. It's absolutely right. And Michael and I have enough gray hair, what hair I have left. He has a wonderful coif on his. But we have enough gray hair to really have the authenticity, the experience, the judgment with which to tell you that. So please stay in. Don't worry about silly things like the yen carry unwind. I'm not even sure if I'm putting those words in the right order. And that's the point.
And you don't get more of a pros pro than Lebenthal. And I agree with him. I don't know. We've explained this yen carry trade. I only kind of half get it myself. but this is not something that mere mortals ever undertake. So listen to Lebenthal, as we always say. Jim Lebenthal, a partner at Cerity Partners, contributor for CNBC, the voice of reason on your TV. Thank you, Jim Lebenthal.
It is great to see you. And as I always say, follow Farr.
There you go. Follow Farr. Appreciate it. Mahaffee's coming up, folks, and then Stephanie Link. Please stay with us.
Thank you for joining us this week on the FarrCast. Now it's time for political analyst Dan Mahaffee and your host, Michael Farr.
Welcome back. Dan Mahaffee is vice chairman of the Dr. Scholl Foundation, a fellow at the Center for the Study of the Presidency and Congress, and the senior political analyst. Now coming to the end of season 7 here on the FarrCast, series 7 on the FarrCast, getting ready to start series 8. God help us all. Welcome back, Dan.
Good morning, Michael. Thank you.
Saw Charlie Cook's polls, the Cook polls and Cook report. Charlie Cook, one of the best strategists in Washington, impartial, bipartisan, and smart as a whip, a great organization. I've known him for decades, and been on TV with him a bunch, and one of the nicest guys you ever want to talk to, Charlie. And he's
Political Yoda comes to mind. Political Yoda.
And he's funny. Funny. And the poll that just came out says that Vice President Harris, across key battleground states, basically has flip-flopped the lead. She is 3 points ahead in many of them, and some of them where that we're going to go Republican. He had something like a 9, 10, 12% lead, and he now has a 3% lead. I mean, it's eroding big time. It's a big flip. What does this mean, Dan? And are you surprised?
Well, what I'm looking at, let's break down that poll. The 7 key swing states: Arizona, Georgia, Michigan, Nevada, North Carolina, Pennsylvania, Wisconsin. In May, Trump was ahead handily in all of them, just tied in Wisconsin. Now they're tied in Georgia. Trump has a narrow lead in Nevada, and Harris leads in all of the rest. So you see that swing in the election. And if you broke down the elements in there, what you see are both the swing in independents. A key sector of the deciding block of this vote has swung from Trump to Harris since that switch, since May. And you also see a reinvigoration of the energy among women voters and Black voters for her. Key elements that will hopefully, and if you look at hopefully for Harris, bring together what Democrats dream of as almost restoring the 2008, 2012 Obama coalition, Obama map. That's why you see North Carolina suddenly coming into discussion, why you see candidates from both parties there. And that's one where, look, if the Harris campaign can get North Carolina, they can worry less about the upper Midwest or Arizona or Georgia. So that's why I think we've seen both candidates in North Carolina. It's a state that Democrats, if you talk to them, they long thought that would turn blue before Georgia. But we also have to remember North Carolina is a very unique state, has 3.5 million rural residents, and only Texas has more. So that's a state that you have to look at. Also, let's not forget Mark Robinson. The Republicans there have run an extremely extreme candidate for governor. He is far beyond the normal pale of conservatism. And so that's going to be an effect. So North Carolina is one of those states we're seeing. But again, forest through the trees here, you see the major shift in momentum. And to get to your final question of, am I surprised? I am not, as I look through this more, because one of the themes we hearkened on throughout the spring and even last winter, 60, 65, 75% of Americans wanted a matchup other than Biden and Trump. And right now, for what we're seeing, they're rewarding the party that has given them an alternative.
I was getting ready to make 2 points before you mentioned, and I think that's a wonderful assessment and description of right where we are and how we've gotten here. You said something about the normal pale of conservatism, and I have no idea what that is anymore, what the normal pale of conservatism, because the folks that strike me as normal conservatives are not the MAGA conservatives. And I'm reminded of those people who say, Farr, I've always been a Republican and I don't feel like a Republican anymore. I don't feel like I left the Republican Party. I feel like the Republican Party left me. I think it's interesting if we could figure out, at some point that normal pale of conservatism. But before we go there, I'm struck by two things that are just ringing loudly in my ear. One, my friend Leland Vittert, the anchor from News Nation, has continued to tell me everything changes in politics. Everyone's Malthusian, but everything changes. And this could change 3 more times before November. Don't think it won't. And actually, if you want to predict something, predict that it will change 3 more times before the election dramatically, and everybody will be shocked when it changes. The second thing I'm reminded of is that line from James Carville standing at the bar who says, who's told me, he said, Joe Biden can't beat Donald Trump. Can't. But Donald Trump can beat Donald Trump. And I give it about 50-50 odds he does. He'll beat himself. He'll shoot himself right in the foot. Well, as long as they keep Vice President Harris on that teleprompter, it's working. She's not good. Not good. Not even close. Not even okay as a stand-up, off-the-cuff interview. Not even okay. Not even okay, folks. I'm not being partisan, I promise. She's bad at that. We can look at any number of clips, the friendly interviews on the Today Show, for God's sakes, and she's awful. So you keep her on the teleprompter and she sounds pretty good. You keep Donald Trump on the teleprompter, he sounds pretty good, but they can't do it. He just keeps shooting himself in the foot. Mm-hmm. Whether it was at the National Association of Black Journalists, why did he do that? Why did he do that? Whether it was the Tic Tac thing yesterday, why does he do this? Dan, mm-hmm. why can't they keep Donald Trump on script? And will he continue to lose if he continues to stay off script?
Michael, this is a pattern we've followed through all 7 seasons of this show. Will Donald Trump stay on script?
Shooting himself in the foot now in season 7.
And let's acknowledge first of all that the 2016 victory, remarkable as it was one, hacking the Electoral College while also going up against an extremely flawed Democratic candidate.
Wait a minute, also hacking the Electoral College. There's real hacking threats out there. What do you mean by that? Are you suggesting something?
No, I'm not suggesting any kind of malfeasance. I'm actually, let's put it this way, using the Electoral College to his advantage, understanding that by swinging just a few states in his advantage, even by losing the popular vote, that he could turn around and then win these states that Democrats had taken for granted. And let's be honest with ourselves, too. Hillary Clinton was not a transformational candidate. Yes, she could have been the first female president, but she was also not going to be a new generation, a new breed of politician like you saw with Obama. She was a known quantity. You fast forward to 2018. Will Trump stay on message about the economy or the tax cuts? Or does he go into the midterms on cultural issues, the government shutdown, all those things that shot himself in the foot right before his first midterm? During the pandemic, will he stay on the vaccines, on Project Warp Speed, on preparedness as the public is concerned? No, he starts talking about bleach injections and things of that nature. You get to the campaign itself. He runs against Biden, but at this point, the public, other than his supporters, have become so used to his and numbed in some ways to his statements, his pronouncements, his going off script. But that is now coming down to, again, is he able to do the job again? Voters are asking that question. And if these statements do seem more and more unhinged or not with it, it just again continues that contrast between the nearly 80-year-old Donald Trump and then the young change candidates, relatively young, 59 and 60, of Harris and Walz.
Okay. And I just want to harp on this one thing. You are not suggesting anything in the Trump campaign that was untoward. In fact, you're actually offering a compliment that it was strategically smart to basically organize his campaign.
Yes, yeah, they understood how to run the electoral college rather than the Clinton campaign at the time.
Okay, perfect. Now we'll see if that happens again, and we'll see how well we can go back and take a look how it fell apart with when he ran against now President Biden. All right, so Dan, and I want to move on to one other thing, and we're running out of time. I can't believe it. You heard what I said about Leland Vittert, suggesting that we could see 3 different huge swings between now and November. You agree with that? And should we?
Of course, I agree with that. And I think predicting the change, a big wild card is next week. Does the Democratic convention go well? Do we see protesters, unrest in the streets of Chicago? That, again, could change the narrative. They could have, obviously, more momentum and a good bump coming out of this. But if you have chaos in the loop, you're not going to have a good scene out of that. That'll hurt the momentum.
But we're hearing that there will be protests, and we're hearing that stuff is already getting in place. It's so disheartening to me that people are becoming, I don't know, violent or.
And look, and I think if we have thousands of folks peacefully exercising their First Amendment rights as they're allowed to, that's one thing. And if we can avoid violence, rioting, that kind of burning, but there are elements who seek to exacerbate any of these things, and you hope that the authorities will respond appropriately in Chicago. That too, you have currently it's not getting traction, but they are trying to go after Walz's military record. I don't know if there's any there beyond that, but that's another thing that can change. And finally, it's the economy, stupid, to go back to our own friend Jim Carville. If this slows down, if this doesn't soft land, if we have a sudden breakdown in something because of the slowdown, we always have these things that tend to come out of the financial markets in October or September. What will that do to the voters' sentiment? On the other hand, they could still have a tailwind at their back on the economy if these inflation numbers continue to come down and they get an interest rate cut right before the election.
We're going to continue to watch for change as being the most normal thing we can look for. To my fellow Americans, please, we're better than all of this violent stuff. Please. If you want to peacefully protest, great, go do it. But let's remember who we are. We're better than this, and we don't. This violence is awful. Finally, I need 30 seconds on why Ukraine's going into Russia and what it's going to mean, and why this isn't going to move the needle here. And I got to go.
I think this moves the needle if the Ukrainians can consolidate and hold some of this territory for negotiations, as well as use the Russian POWs they've captured in exchanges. But a very bold move by the Ukrainians, but a lot to develop still on what they've done.
Dan Mahaffee from the Dr. Scholl Foundation, Center for the Study of the President and Congress. Thank you so much for being with us. We're going to be right back with Link. Stephanie Link. Stay with us.
Michael Farr and the FarrCast are proud to support Heroes, Inc. Heroes supports the spouses and children of law enforcement officers and firefighters who gave their lives in the line of duty to the greater Washington, D.C. community. Their singular goal is to honor the supreme sacrifice made by these individuals by caring for their families. Heroes' work begins within 24 hours of the tragic loss and continues indefinitely. We invite you to learn more about Heroes' mission at heroes.org. We hope that you will consider supporting Heroes as they endeavor to honor those who protect us. That's heroes.org. Heroes, here for you, here for good. And now, back to the FarrCast and your host, Michael Farr. We appreciate you listening into the FarrCast this week. And now to introduce this week's special guest, here's your host, Michael Farr.
Welcome back to the FarrCast. I am Michael Farr. It is the 15th day of August, halfway through the third quarter of 2024. We've been through the big flash crash, which turned out to be a carry trade flash crash, and nobody really knows exactly how that carry trade exactly works, where you borrow in the yen and then you leverage it and you convert it to dollars and the blah, blah, blah. Okay, but it unwound and everybody was covered short and and that seems to be over with. It looks like we had a decent retail sales number, decent, not outstanding, but decent in the plus column. Walmart's earnings this morning. We're not making a recommendation to buy or sell Walmart, ladies and gentlemen. We don't do that. But we're just reporting that the nation's largest retailer had really good numbers. And the stock was up 39% year to date, up 6% in the pre-market, 45% in Walmart year to date. Now, this is a retailer. This is not a chip manufacturer. These people don't have AI. Well, they use some AI, but this is not one of those companies. This is a nuts and bolts company. And every time I see this, I think, were they really worth 45% less 7.5 months ago? Or are they really worth 45% more 7.5 months later? Really, on a company that billions of dollars in difference, one of those, in my opinion and experience, has to be wrong. I don't know which one it is, but one of them clearly has to be wrong. The stock in one of those times is mispriced because there's not a 45% change in value in Walmart, for God's sakes. Okay, you hear me rant about what we should buy and what we should sell, and I'm not making a recommendation, just an observation, but I can tell you this feels very odd to me, feels very odd. Stephanie Link, as promised, joining us now, the Chief Investment Strategist at Hightower Advisors, a CNBC contributor and my great friend for many years. Welcome back, Stephanie.
Hi, Michael. How are you?
I'm just wonderful. Thank you. I'm all riled up today, as you can hear. I'm just all riled up. You know, markets are getting back to their still all-time highs. People continue to be, very bearish. Many folks with the economic numbers getting a little bit softer are going, oh, we're going to have the recession I've been telling you we're going to have for 3 years. I'm one of those who thought we were going to have the recession, and I'm sitting there going, this is looking more like a soft landing to me at this point. I understand that means a slowing, but boy, this is feeling not awful at all, and I'm very happy owning my long-term stocks. It's how I feel. What are you thinking? What does all this mean to you? How do you feel? And I've been listening to at Hightower, ladies and gentlemen, Stephanie does these videos for all of the advisors, and then she does them when things kind of go a little bit crazy. So we've seen a couple of special ones in the past couple of weeks. They're really helpful. So thank you for those, Steph. I wish that everybody could see those things, but anyway, what are you thinking? And thanks for those videos.
Oh, well, you're most welcome. And I appreciate all of the FarrCast. And it's same thing. It's like, right? Like we don't have the answers, but what we can look at is the past. We can look at and analyze the future and the data. The data is maybe, Michael, maybe it's a bumpy landing. Maybe it's not a soft landing or a hard landing. Maybe it's just bumpy. And that's what I think we had last Monday when we had the markets fall and Japan down 12%. Here's the thing. I would have been, and I know you would have been much more worried if it was a credit problem.
Oh, yeah.
But last Monday was not a credit problem. It was yen carry, unwind, whatever, right? Like none of us are, I'm not an expert on that. You definitely are more than I, but it was a positioning thing. And I stepped back last week and I'm like, okay, so what is the economy doing? Well, guess what? The Atlanta Fed tracker is at 2.9% for GDP. So maybe we're not 2.9 because we know it's a very volatile series, but maybe it's a 2% growth. In a 2% growth world with ISM services last Monday came out and it showed expansion. It showed new orders expanding. It showed employment hanging in there. So that Friday before, which is what everybody kind of freaked out about in terms of a really weak non-farm payroll report, it wasn't confirmed. It showed that things aren't ending. The world is not ending. Are we softening? Are we slowing? Yeah, we are. We definitely are. We grew 3.4% last year in GDP. To get to 2.5%, you're going to see the numbers start to come in. But I still think the economy is strong enough. And it has to do with the consumer. You mentioned it, Walmart. Maybe you don't buy Walmart up 38% today, but there are parts of the consumer that's okay. It's hanging in. And that's because the job market, labor market, even though it is slowing too, it is still quite strong. I look at the 4-week moving average and initial jobless claims because that's the forward indicator. And it's running 240,000. We know recessionary levels, it gets to 350,000. We're at 240,000. So we have a ways to go before we can all of a sudden say jobs are done, unemployment is going much higher. But at the same time, we have a Fed that's probably starting to ease, and that's great. And that's a good thing. Rates coming down, inflation coming down, also pretty good for the consumer.
You know, I went on a rant this morning earlier, Stephanie. Surprise, surprise, Farr went on a rant saying, look, that weaker unemployment number that we added fewer jobs is absolutely an essential part of curtailing inflation. That you talked about the service sector, but we had a JOLTS number for a couple of years that was almost 2-to-1, meaning there were twice as many job openings as people looking for work. And when you've got twice as many job openings, you have to pay the employees more. And that's a driver of wage inflation. And wage inflation is a huge contributor to overall inflation. That you can't have a tight labor market and get rid of wage inflation. So it softens a bit, and it has softened a bit. And the inflation's coming down. The Fed's not easing either because we've got a credit problem, Stephanie. I love that you said that because credit problems is a really you don't have a headache, you've got a heart issue.
Yes.
when it comes to having a credit problem in the economy.
Yes.
We're not seeing those credit problems. So we've got a bit of a slowing, but what we really have is we have an adjustment rather than a rush to save the economy. We're adjusting monetary policy so that it suits the inflation and the GDP growth rate. That's far different from the sort of bailouts we've watched the Fed do over the years. So this is not an emergency move. This is not an, oh my God, break the glass kind of a moment. This is, we are accomplishing our objective of bringing inflation down. Let's not overdo it and see if we can get it right. And as a result, we've got a bumpiness, and I think that'll probably continue through the fall, and it'll be exacerbated by all of the political noise. God help us all. But okay, so let's come back and let's just finish up with this, Stephanie. Investors still have to invest, and so often they can get sidetracked by how they feel about their investments. People look at us after doing this for as many years and decades as we've done it. Stephanie's only 29, so the decades apply to me. But as I think about it, the way you feel after so many years of experience about certain things actually does matter. The way I feel matters. And yet you and I want to resort to our discipline. Give us a message for investors about how we look for the rest of the year and what your thoughts are about 2025. It's not too soon to be thinking about that.
No, that's true. But I will say this, and I'm going to give you certainly some props. You were in buying 2 Fridays ago. You were in buying last Monday. I was buying last Monday. We were buying because we saw wonderful companies, number 1 or number 2 companies in their respective industries on sale. That perhaps maybe we didn't want to chase, because that's not what we do. We don't chase. We don't buy high. We try to buy low. And that's exactly what both of us, you're buying a couple of different names than I was buying, but I was buying. And it was because of that credit conversation. It wasn't a problem with the structure of the banking system. It was a weird day. It was a weird couple of days that happens. And oh, by the way, I totally agree with you. I think the rest of this month and September, I think is going to be volatile because it's seasonally a weak period. But to your point on we have elections and all that stuff going on too. Okay, you and I always talk about this. The market always climbs a wall of worry. We worry when we don't worry because that means we're complacent. And so there's always something to worry about, but let's find opportunities. And so for me, I think after we get through this kind of uncomfortable period, I think into the end of the year, the economy, whether we're growing at 2.9% or 2%, I think that bodes well for earnings. And our good friend Larry Kudlow told us many, many years ago, stocks follow profits on the way up and on the way down. And profits are going higher. And so that's why we want to be buying on any weakness. And that's why we want to take advantage. Now, next year, I don't know. It's going to be interesting because you start to have the fiscal stimulus start to wane a bit. We don't know who's in the office, so we don't know the policies that are going to be put in place. But I think the consumer is going to stay okay. It's always been a bad investment to bet against the U.S. consumer. Even in a recession, the consumers, we are a nation of spenders. And as long as that's the case, you know what? The consumer is 75% of the economy. And if I think the consumer is going to stay okay, maybe not as strong as this year or the last couple of years, I want to be invested. And last but not least, the long-term total return of the S&P 500 is 7.7%. We are up 14% year to date in the S&P 500. We were up 26% last year. Let's just normalize. We could mean revert, but there are always opportunities.
There are always opportunities and always opportunities if you're disciplined. And, you know, quoting Kudlow, I think is great. And we know that Kudlow can be political, and that's not the part of Kudlow that either of us are quoting, right?
No.
Earnings are the mother's milk of stock price performance, Larry has said for years. And I have agreed with him, as Stephanie agrees with him. Every professional investor agrees with him. I think you're hearing the same message.
Yeah.
Keep your head, watch the numbers, follow your discipline, and think about the long term. Yeah. People get rich slowly in the stock market and do very well. The pigs and hogs get slaughtered, and the traders often get slaughtered. I'm not a trader. It's not what I do, but I do look for opportunity. So does Stephanie. And so, of course, we listen to Link here on the FarrCast. Stephanie, thank you so much for being with us. Hope to see you again on the FarrCast. It's been too long. Ladies and gentlemen, that's it for another FarrCast as we cover Wall Street, Washington, and the world. Thank you to my guests, Jim Lebenthal, Dan Mahaffee, and the great Stephanie Link. We'll be back again next week to help you think about the world and your investing portfolio. Thanks so much for being with us. For Harry Jennings, our producer, everybody at Hightower, Farr Miller, Washington, we really appreciate it. Share us on social media. I'm Michael Farr. Thank you so much.
Thanks for joining us this week on the FarrCast. And thanks to our guests, Jim Lebenthal, Dan Mahaffee, and special guest, Stephanie Link. FarrCast is produced by Michael Farr and Harry Jennings and comes to you weekly for free on all major podcast platforms, including Spotify, TuneIn, and Apple Podcasts. We hope you enjoy the show as much as we enjoy making it for you. You can stream past episodes and subscribe so you never miss a new one. Please be aware that anytime we or any of our guests mention a specific company, sector, or refer to performance in relation to an earnings report, news headline, or economic trend, it is not a recommendation to buy or sell. Review the risks and rewards of any investment with your financial advisor for what specific investment and general strategy is appropriate for you before you make any investment decision. As always, if we can be of assistance at Farr Miller in Washington, please reach out to me at hjennings@farrmiller.com. We are here to help, and I'm happy to arrange for any of our listeners an appointment with one of our financial professionals to review your portfolio, your needs, and your goals. We love reading all of your notes, and we try to reply to as many as we can. You can reach us at hjennings@farrmiller.com. Let us know any questions you have about past episodes or questions you'd like us to address in upcoming shows. Take care, stay safe, and stay healthy. Thanks for listening to the FarrCast. Wall Street, Washington, and the world. Farr, Miller & Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, an SEC-registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors, LLC. Securities are offered through Hightower Securities, LLC. All information referenced herein is from sources believed to be reliable. Farr, Miller & Washington and Hightower Advisors, LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr, Miller & Washington and Hightower Advisors, LLC and any of its affiliates make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions or results obtained from the use of this information. Farr, Miller & Washington and Hightower Advisors, LLC and any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and the materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors, LLC or any of its affiliates. Farr, Miller & Washington and Hightower Advisors, LLC or any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented in any way to any entity as tax or legal advice. Clients are urged to consult their tax and or legal advisors for related questions.